What is going on, everybody? I am the Financial Conspirator, your guide for everything financials and conspiracies. We are back with another video. Let's get right into it.
$4? Wasn't this $3 yesterday? Withdrawal fee? Why must I pay to access my own money?
I just graduated with $120,000 in student debt.
Debt for learning. What kind of sicko society is this?
The Fed injects another $1 trillion into the economy.
You can't just print it. That's not money. That's madness.
Thomas Jefferson, is that you?
Why the would you take the dollar off the gold standard? I worked so hard for us to have hard money.
Nothing stops this train. How do I get on that train?
So many of the things that we find normal today would be revolted for. Henry Ford said if the American people understood truly the banking system, there would be a revolution before tomorrow morning.
Let's ask 100-year-old billionaire investor and man who most resembles a blobfish, Charlie Munger, why they think capitalism works.
What makes capitalism work
Come on, Charlie, tell us.
is the fact that if you're an able-bodied young person, if you refuse to work, you suffer a fair amount of agony. And it's because of that agony that this whole economic system.
Cool, so you're a vulture who thrives on the agony of other people. Sounds like a cool system to me.
And that is the fiat system. The fiat system will only work. It can only work when there are plebs, fiat slaves to exploit. That is the only way the fiat system can work. If people started to wake up and save their time, energy, effort, blood, sweat, and tears in Bitcoin, a lot of this exploitation would not be happening. We'd be able to retire sooner, stop working all of our lives, and have our money work for us. And we have a video from Michael Saylor explaining how and why Bitcoin is on a need-to-know basis.
You know, one of the rules of Bitcoin is that Bitcoin's on a need-to-know basis. You have to need to know about Bitcoin before you'll open your mind to it. It's a paradigm shift, and I would refer to it as digital energy. But if you think about it, the first time we figured out how to channel energy in cyberspace, it's just as profound as if you went to somebody in 1800 and said, you know, one day we're going to have this clean, silent electricity, and you're not going to be able to see it or touch it, but it's going to power every single machine in your factory, and it's going to power everything in your house. And you would think, you know, I don't get it, I don't need it. And until someone shows you what it can do, and until you get to the point where you do need it, you're not going to embrace a new form of energy. And so MicroStrategy didn't really need Bitcoin until 2020. And then during the COVID lockdown crisis, we realized that all of our capital was kind of a melting ice cube. We had a lot of money that was generating 0% interest, losing 15 to 20% of its value a year. So we had a need to know. And then we started thinking, maybe there's something else we can invest this money in. And we discovered Bitcoin, which I think is digital capital. I mean, the most powerful application of digital energy is capital. So we needed it, we found it, we embraced it, and we become the largest.
And I think the working class needs Bitcoin more than anybody else. And it's a shame because those are the people you see going into shit coins, XRP, XLM, ISO, whatever the fuck coins, fuck coins, as Chris Johnson calls them. Those are the people who need Bitcoin the most, not some ulterior coin that's cheaper, so therefore you think it'll give you a higher return because it's smaller. No, you need complete, decentralized digital sovereignty. And that can only be found with Bitcoin. Only be found with Bitcoin. There is no second best salvation. It's Bitcoin. Bitcoin fixes this. It's not Bitcoin and Ethereum, Bitcoin and Chainlink. It's Bitcoin. It's easier for a rich person to put 1% of their portfolio in Bitcoin and not worry about it. But what we need is the working class waking up and understanding that holding fiat, no amount of hard work and saving in dollars is going to save them. It is only Bitcoin.
Mine is Bitcoin is demonetizing foreign real estate, private equity, public equity, other sorts of store of value assets everywhere in the world. 20th century physical analog assets are becoming 21st century digital assets. These companies like Apple and Microsoft, if they could buy the S&P index, they'd be better off. It's against SEC rules.
Right.
If they could buy each other's securities, if the Mag 7 could buy each other's securities, they would be better off. That's against SEC rules. The only security Apple can buy is Apple stock. And what do? They buy their own security. So, and generally, if you're trying to create shareholder value, you don't want to park it in a fiat currency. You want to park it in a tangible asset. But gold and real estate don't make sense.
Did you ever see, you know, we're talking about stable coins.
And I think that was a special... I want to give this a special message to all the gold and silver guys out there. You are not safe with gold and silver. You think if the world ends, gold and silver will be used as some sort of trading currency. I promise you, before that happens, before the world even gets to the point where it ends, the U.S. government will come around and start collecting that metal. Gold, silver, land, any tangible physical resources will be seized as they have been before. This is another reason why Bitcoin is different. Bitcoin is inevitable. And you should probably own some. And this is not financial advice. This is all just my opinions. So, what are we looking at in the macro environment? De-dollarization is accelerating. I just saw a post on Twitter, someone asking, what if Tether begins to buy STRC instead of U.S. treasuries? Right? And we're seeing Bitcoin is being tracked by the IMF. The U.S. Treasury has been repeatedly stating that they're planning to and don't have to announce, if they already are, allocating to Bitcoin. The Fed liquidity tools are reawakening. There's a 90% chance that the Fed is going to cut soon. Just saw that yesterday as well. BlackRock has reiterated that we are in phase 1 of the AI boom. And I think AI will need a decentralized monetary system. And macro tides favor Bitcoin-backed entities like MSTR. Now, I know all the Bitcoin guys are going to click off this video, but for the MSTR folks, here we go. Fong Li in the Q2 earnings call explaining why MSTR is mispriced according to traditional valuation metrics.
Let's look at net income. Similarly ranked against the S&P 500, we would be the number 13 company in terms of net income. And in terms of market cap, again, 96. Well, let's look at the P to E multiple of the S&P 500 universe. And this is fairly staggering when you look at these numbers. We have a P to E multiple of 4.7x. There are only 5 companies in the S&P 500 universe that have a lower P to E multiple than us. So on the one hand, we're capitalized on the most innovative technology and capital asset in the history of mankind. On the other hand, we're possibly the most misunderstood and undervalued stock in the US and potentially in the world.
I think that was an amazing point, and I posted that on my X account, my Twitter account, at The Financial Conspirator. that MSTR is the most asymmetric bet in the market right now, besides Bitcoin, obviously. They are backed by they are the most over-collateralized, safest stock on the market. I mean, and that's what Bitcoin does. It's not through Ethereum. It's not through staking. It's not through wrapped Bitcoin. It's Bitcoin. They're the most over-collateralized, undervalued, and mispriced stock on Earth. Backed by Bitcoin, rich in profit, and completely ignored by Wall Street. I mean, this kind of thing, it excites me just as much as Bitcoin. I wasn't able to get into Bitcoin as early as I'm able to get into MSTR. I mean, this is something to look out for, in my opinion.
So on top of a $24 billion earnings, this is a traditional valuation. And let's say you take a 10x to 40x multiple with 24x right in between those two. The 24x multiple would mean a $600 billion valuation for Strategy, the company, which would mean that we're about 5x undervalued, right? And the range of a 10x multiple might say it's 240 billion, so we're 50% undervalued, or $960 billion, nearly $1 trillion, if we get a valuation equivalent to some of the best performing companies out there, like NVIDIA.
And I already know people in the comments, well, they're not a traditional company. They don't have any earnings. Yes, owning and holding Bitcoin and creating Bitcoin gain is shareholder value. That is earnings. That is providing value. And you can argue with a wall.
Right. I'm Palantir. I don't really care what they're doing in their business with AI, and I don't care about what their revenues are. I'm going to trade Palantir at 50x revenue. Right. So this is not unique to Bitcoin. First of all, the idea of a multiple to net asset value. And so people call it alchemy. I call it valuation. Right. And every bank and everyone who's been to, business school or studied corporate finance realizes that there's a time when the traditional models don't work, and you have to come up with a different way to value a company. Right. Our belief is a good way to value the company is take the Bitcoin yield, right? And then take the Bitcoin gain, which is a function of Bitcoin yield. It's a dollar gain, right? Like it's sort of like an earnings, right? And take a multiple on that, right? And so we've projected, right, that this year, right, our Bitcoin dollar gain is going to be in the $25 billion range. And if we do that, and you take a typical EBITDA multiple or an earnings multiple, and you say, hey, what's the company worth if they had produced $25 billion in Bitcoin dollar gain? Well, perhaps you'll put a 20x multiple on that. But what if that number is growing 50% a year? Should you put a 30x multiple on it, a 40x multiple? It's not unreasonable. And you would value Strategy there then somewhere between, right, $500 billion and $1 trillion. And then you can go back and say, well, that versus our net asset value of 60, right? Maybe we should be at 10x NAV or 20x NAV, right? So it's not alchemy. This has been happening since the beginning of corporate finance and equity valuations.
So I hope you guys understand that Bitcoin is not only going to make a lot of people a lot of money, it's also going to reprice or reshape how we view or how we value traditional finance companies. That's why I say MSTR is so undervalued, and it's hard to really put into words, because I think that in the future we won't just be looking at companies for how much revenue they provide. We will be looking at Bitcoin per share. Do they own Bitcoin? Are they buying Bitcoin? Is the Bitcoin per share increasing? Are they dilutive? Are they accretive? This is all something that Strategy and Metaplanet, to be fair, has pioneered. And they will be handsomely rewarded for this. I think that the market still doesn't quite appreciate how early MSTR is to Bitcoin, or how early they were to Bitcoin. In 2020, I didn't appreciate it, but I do now. And I'm trying to get you to appreciate it. And again, none of this is financial advice, but I need you to remember, Bitcoin is not a speculation. It's the ultimate defense. And defense is the best offense. I'm out.